Welcome to CashTalk, the podcast where we delve into the depths of finance, business, and life itself. I'm your host, John Cachia, a multi-award-winning wealth advisor with a passion for empowering ambitious Australians to confidently achieve financial freedom. Hey everyone, before we get started, this is a quick reminder that everything in this podcast is of a general nature and nothing has been tailored to your personal circumstances. So please seek personal financial advice before acting on this information. And welcome back to Cash Talk. Today I'm joined by a friend of mine who has been in the real estate industry for quite a number of years, and she's taken the leap to jump on the podcast, which I don't think is something that she's done before. But I want to really speak to her because a lot of our clients and a lot of people that listen to this podcast are very interesting in either buying or selling property, and it's a big asset when it comes to Australians' investment strategy. So, Symone, thanks for jumping on the podcast.
Thanks for having me.
That's it. Just for everyone to know, we just recorded about 20 minutes of a podcast and then realised that it wasn't on record. So
Take two
here, which is awesome. But there's a few things that I want to go through today, Symone, and one of the big ones that I want to go through is around what's going on in the property market today. I want to go through the emotional side of either buying and selling property, and also some really strong tips that people can go away in both aspects around buying and selling, okay? Sure. Obviously, from my perspective, we look very much at how property fits in the overall picture, both be from a lifestyle and from a financial perspective.
Yes.
However, you are on the ground where people are making these decisions, and especially at the critical decision-making stage. Sure. So let's start with the current state of the economy, because to be totally honest with you, I reckon I have property chats nearly every single day. And this morning even, I was at the gym with a friend who happens to be an accountant. And as accountants and financial advisors do, we talk about money. But we were of a kind of a mutual, let's call it disagreement, about where the state of the property market is. So in your view and what you're seeing, what's going on at the moment?
Very good question, which I get asked on the daily as well. And I think the way to answer that is we are in a really unpredictable market. And what I mean by that is there's markets within markets, and how one area is performing isn't a true reflection of the neighbouring or next suburb. What we are experiencing, more so in the demographic that I'm working with, we truly, or most of the time, deal with first home buyers and investors. So our median house price is around that kind of $750,000, where we experience quite high turnover. Where I speak.
And when you mean turnover, is that meaning, for example, that you've got just simply a lot of people buying and a lot of people selling? Like there's a lot of transactions?
There is. A lot of the sellers that purchase, it's traditionally their first home. They end up, having a family, growing their family, and it's a stepping stone to then get them to that next step. And it is still, I guess, affordable for first home buyers to enter the market and make it their first home.
Yeah. And so you're seeing still a lot of activity that are happening. Have you got, like, if you had to say to me from a seller's perspective, is there a lot of people that are coming to you at the moment with the state of the economy, obviously after the massive interest rate rises that are happening? Are you hearing the financial stress come through from people like, I need to sell because I can't keep up, or not really at this stage?
Not really at this stage. We experienced this more so probably about 18 months ago when we had a lot of our clients that purchased during the COVID era on that 1.8, 1.9% for that 2-year fixed loan, and then they've jumped up to a 6.5%. That's when we noticed during that time frame a lot of family or husband, they've had families, they're down to one wage, and that's where we notice the impact of the market and the economy having its true impact.
Yeah.
At the moment, it's not something that I'm personally coming across quite often.
Yeah, which is interesting because, see, the demographic that you're talking about, we would say is the average Australian.
Yeah, 100%.
Yeah,
Yes.
it's the average Australian. If you looked at all the median kind of incomes, medium debts, you're probably looking at that, which is really good. And actually one of the other reasons why I wanted you on, because
Sure.
like you said, there's certain markets you can talk about in Victoria, and you've got Toorak and Brighton, or you've got in Sydney, Byron Bay,
They're
and all of
completely different.
They're completely different markets.
Yeah,
But
correct.
for the populace,
Yeah.
what you're seeing is still transactions happening. And I've always believed this with property is around, if more people can afford it,
Yes.
there's going to be more sustainability in that area.
Sure.
Now, it doesn't mean that that is a caveat for everyone. You can look at places like Ballarat that are still worth, a few $100,000. It doesn't mean that you go and invest in there.
No.
However, in an area where you're talking, there's still demand. And if you look at the reasons why there's so much demand, well, there's still families that want to live there. They've still got the infrastructure that wants to be there, and they can still afford that area.
And that's the infrastructure is a massive part in terms of why a lot of our clients do come to where we're situated, because you've got the beach, which is 10 minutes down the road. You've got the Mornington Peninsula. You've got all the major arterials within a 5-minute radius from you. So a lot of our clients actually, can't afford to purchase where they grew up. And I was one of them, where coming to our location within a 10, 15-minute drive, you're basically back at your family home.
Correct. And it's big because when you look at it from a demographic perspective, you've got a lot of millennials that are now purchasing properties or or in the market as it is right now. And
Yep.
the baby boomer market is a huge market, but they're all kind of downsizing.
Yes.
And all of those kids of the baby boomers are now having their own children.
Sure.
And with both people working, well, they want to be next to usually grandparents. It's the drop off of the kids. It's the whatever. I need to be close to mum and dad.
Correct.
And you're seeing this. I'm seeing this. I see it with our clients. So these areas are going to be in high demand, and also school catchments. Huge. Huge thing to take into consideration. And
Yes.
I say to people that before they have children,
Factor that in. Correct.
because if you're not factoring in a school zone, like that is a big difference when it comes to purchasing a property correctly.
And selling's expensive. To be honest, yes.
Yes.
Yes, selling's expensive. So it's you have to look at your surroundings and plan for your future. And I think that's one of the most important things in real estate is your why. Why this? Why now? And if it aligns with you, then that's the best decision.
Correct. And it's interesting you say that, because we say to people, like, the property decision that you make is going to be one of your biggest decisions. Yet Australians tend to just buy willy-nilly. I had a conversation with a prospective client today, and he's like, we're just thinking about buying 2 investment properties. I'm like, why? And he's like, oh, I just think it's a good idea. And I'm like, so you haven't looked at anything. You don't know the impact that that's going to have on your
Rental
children.
yields.
So on and so forth. And so I'm finding a lot of people, and it is because property has done so well for a significant level of time.
Sure,
Yeah.
sure.
And there's this kind of like Australian kind of immunity to it can go bad.
Yes.
Yeah. And so people just throw things at property. However, we do know there's a lot of people that haven't made money off property, number one. 2, very hard, expensive to get in, expensive to get out.
Correct.
Yeah. And so
Correct.
getting the property decision correct and having the right professional team around you is so important.
Couldn't agree more. And that's where it comes to, preparing your home for sale. It's more than just, getting your home on the market and hoping for the best. It's, as myself walking in, it's staging a home. We stage probably nearly 80% of our properties. And the reason for that is, as agents wanting to get that emotional or needing to get that emotional connection from buyers, they're going to see your property online. And if price and marketing is appealing, we're going to capture that audience to bring them in the doors.
It's very interesting you talk about emotion, because it's something that it's big what we do in Thriving Wealth around emotion. Like, we figured out like the difference between, say, property A, property B, or share A, share B is not going to be as big of a determining factor on your success than your emotions. If you've got the ability to control your emotions and control your behaviors, you make better decisions with your money on a daily basis. And then when it's in practice about a big decision, you're then not emotionally connected, because in honesty, your marketing techniques, and it's your job, is to focus on getting the emotions from the buyer
100%.
to pay a price for the seller that's emotionally driven.
Well, and the reality of it is an emotional buyer is always going to pay more than an investor. An investor's a numbers game. If the rental yield is there and the numbers align, they'll snap it up. Where the emotional buyer, it's more envisioning the children playing in the playground. If you're a builder, it's getting that blank canvas, talking about the scope as to how we can really bring this and make it your own.
So that's why people hate talking to me when I'm looking at purchasing property. They're like, John's the worst. So it's interesting because then on the flip side, from a seller's perspective, because there's obviously a lot of reasons to why people sell.
Yes.
Yeah.
Yep.
A lot of the reasons or the most common reason where people come to sell is that what we find is it's the kids now leaving the nest.
Yes.
Yeah. Or the kids have outgrown the house and they need to either upgrade, downgrade, whatever. That's the most common.
Yes,
Obviously, there's other
a lot of
areas.
that. Yes.
However, you must have to or work with, more importantly, the emotional attachment to the house.
Yes.
Because from a seller's perspective, they can set unrealistic expectations, which can then, like where I've seen a property, and it must be because of this property's been on the market at a ridiculous price and no one is buying this property.
Yes.
So how do you work with, on the seller's side, these emotions?
I think it's really important to acknowledge that buyers and sellers are more educated now than ever in terms of you click on or go on realestate.com, you go to the sold section and there's data there in terms of locations, what similar properties with similar amenities are selling for. So buyers are educated. Also, as agents, we need to provide a statement of information, which we need to indicate 3 comparable properties as to why we're marketing the home the way we are. It's really tricky when you do have an emotional connection with a property, okay? And I was guilty of that. I've just sold my property and even being in the industry, that home had a lot of fond memories. And
of course.
I had the price my dream price that I wanted to achieve, which, we did achieve that in the end, but it was a journey to get there. And I think as an agent, it's really important to listen to your clients. And, I say to a lot of my clients, if that price is out there, we will get it for you. We can try for 2 to 3 weeks. And if we're not getting the people through the door, the written offers, second inspections, then be prepared for a conversation that we will have to realign. Okay. So I think it's really important to acknowledge their reasonings and to work with them. And as I said, myself as an agent, I'm not the gatekeeper of price.
The market will dictate.
The market dictates that.
Yeah, correct. And so how do you work with the seller where it's like eagerness to sell, but you don't want to tell the buyer that that's the case? Because I'm sure you've got people that are like, yeah, we want to accept that price. We want to accept that price. And you're just like, no, they're emotionally driven. They're going to get, you're going to get more, because I've always loved to know this because...
Look, I think the reality as an agent, we're here to get an incredible result for my clients, as well as also, helping our buyers purchase their first property.
Yeah.
It's that fine line.
And that's what I'm saying. It's not as people just think it's like these scammers that are in the background. It's not the case. People do have an ethical compass.
Look, I've never had a purchaser, purchase a home from me and then call me 6, 12, 10 years later and say, Symone, I shouldn't have paid that extra $10,000 for my property. It's more what I can do to help buyers secure that property, as well as assisting my clients in selling and getting them to their next journey as well. So I think there is a fine line in terms of taking advantage of people, which I don't necessarily agree with.
Yeah.
But I think it's also acknowledging that these buyers really want the home, my sellers really want to sell. How can I get that to come together? We're like matchmakers.
Awesome. Love it. I have a question that I got asked a couple of weeks ago from a client that came to mind. And I don't know the legality around this, so you might be able to help me here, and that's what I'm leaning on. So clients putting in offer to real estate agent.
Yes.
Agents coming back to client and saying, we've got a better offer from someone else.
Yes.
Clients thinking, is there actually another person?
Here. Yes.
Now, I've been in that mental mindset as well. Like,
Yes.
is this person just playing games?
Yes.
Yeah. and they weren't. The
Yes.
person actually bought the property, and the guy who I was working with, I really respect the person.
Sure.
And like I respect yourself. And so I missed out on that property. However, I did have thoughts in my head at some points of like, is there another bidder, or are we just talking smack here?
When I purchased my first property, I
Yeah.
was in a bidding war, I guess you could say, and those thoughts ran through my mind. Am
Yeah.
I negotiating against myself, or is
Yeah.
there generally someone else there?
Yeah.
And it's a hard question to answer because every agent
Yeah.
operates differently.
Yeah. Is there a legal framework to what they should do?
Well, I guess it is. You're being misleading.
Yeah. So it's misleading and deceptive
It's
conduct.
misleading and deceptive, and I don't necessarily work that way
Yeah.
because I think it's so important to look after your buyers because your buyers then become potential vendors.
Yeah.
Okay, so and a lot of the buyers that I deal with are, say, your first home
Yeah.
buyers. They remember this journey.
Yeah, and they're gonna
that
upgrade, or they're
experience.
gonna do whatever at one
So
point. Yes.
there's no need from my personal opinion, and as I said, I can't talk across the board. There's no need to lie. As I said,
So would you say that, obviously that's yourself, would you say that it's for people that are in that position and thinking that position, they need to trust the process and take the consideration that there's more good people than there are bad people?
100%, you have to think that way. Otherwise, the world's a really dark place.
It is. It is.
You do. And I think the reality, whether, let's just talk, if there's another potential buyer there or not, and you as a buyer have increased your offer by an extra $2,000 to $5,000, whatever it may be, and you secured the home, that's what it's all about.
Yeah. Yeah. And it's really and really at the end of the day, you're meeting the expectation of the vendor.
Yes.
Yeah. And it's the
Yes.
vendor who ends up saying, I'm accepting those terms. Which brings me on to another point.
Yes.
We do lending in this business, and we have a pretty robust system to prepare our clients to purchase a property. However, we have seen over the years people being ill prepared in regards to their property purchases,
Yes.
and also not setting the right terms for the purchase as well too. So I want to more talk about offers here.
Yes.
Okay. So number one is around, this is for everyone who's looking to purchase a home. Try and get a pre-approval with pre-approval. The best you can get is subject to valuation on the property, okay? Because you need to secure the actual property and be a suitable property for the loan or the lender.
Yeah.
So you want to try and get a client prepared to that point.
Yes.
But the next point is around the offer that they put with the pre-approval. And just for everyone to know, if you go to auction is unconditional. You cannot put conditions on it as you're bidding. If you're the last one essentially bidding, the only thing usually you can negotiate there is settlement and bits and pieces maybe in the house, but not like unconditional, or conditional to certain things. So we are talking private sale here.
Yes.
So we had a client recently which they had a pre-approval in waiting, so it wasn't done. They found the property, looked to get it done, and we said to them, obviously, subject to finance, 14 days. For people that are watching that don't know or listening that don't know what subject to finance is, essentially it's a day that you agree with the vendor.
Traditionally a 14-day.
Traditionally 14 days, correct, to get your finances sorted out to then be unconditional for that loan. Now, from a real estate agent's perspective, if I'm making an offer, first and foremost, the longer that subject to finance is, the more you're saying to your vendor, this person's not secure.
That's right.
Cool.
That's right.
So, and then the other bit around that. So what we did with this client was we wanted to kind of get that subject to finance as quickly as we could. We knew it was a couple of days out.
Yes.
So we tried to shorten the subject to finance because we're trying to say, we're not playing around here.
We're in a strong position.
We're in a
We
strong
want the
position.
home. We want to act.
Correct.
Yes.
We want to act. So we're coming across confident
Yes.
to the agent saying, now what they did was, which was also really good, is they gave me authority to speak to the agent.
Yeah.
So it was like, not only was the client saying this, it was their advisor calling and saying to the agent, hey, listen, these guys are legit.
Yes.
They're not stuffing around. We are waiting on these calls. So from professional, she's
Yep.
like, all right, well, not only are they telling us, but there's actually a finance person who's
Yeah.
licensed looking after this. So from the agent's perspective, he was very receptive
Sure.
on that term. Now, we had to add other terms in there,
Yes.
which we had to negotiate.
Yes.
So which I want to go through. Another one is around settlement's an interesting one
Yes.
because settlement might work in the favor of the seller. So you've got to get the understanding of what the seller wants or the vendor.
Correct. Settlement's a tricky one in terms of it depends if the both vendor and seller have they got conjunctional sales that we need to align with. It's traditionally they all come together one way or another. It could be a bit of a teething process, but it's really important as an agent when we are listing the home, having or introducing buyers that we're very clear on what the settlement terms are. So as buyers are coming through and they're requesting what the settlement terms are, we can be very clear in that.
And that's one of the biggest thing that I've done personally with property is always speak to the agent about what's their preferred terms.
Sure.
What's their preferred terms? What's their preferred settlement?
Yes.
Because if you as the buyer don't have a preference, if you're meeting the condition of that settlement, it's a lot more appealing.
Yes.
And from a buyer's perspective, what I am trying to do with the seller here is butter up my offer to facilitate their emotions of ease.
Yes.
Yeah?
Yes.
Ease and security.
Because conditions are such a major factor with an offer. In terms of price has a lot of strength behind it, but in terms of conditions, you're subject to finance, your time frame, building and pest, and settlement. And what we're seeing at the moment, a lot are buyers adding the additional clause in there, subject to conveyancing or solicitor review of the documents. And what we're doing with that is we're actually aligning that within the buyer's 3-day cooling off period just to make it a little bit more appealing to vendors as it's one less condition to really factor in. So price does play a really large part, but in terms of conditions can actually hold a lot of strength.
100%. I think the other one that is another one, it was in this case with this particular client, we were working with 2 loans. So what we were working with was the pre-approval for the loan and the equity release from another lender.
Yes.
And so what was held up is we had the pre-approval for the purchase, but we didn't have the equity release off the existing property.
Yeah.
So cash available, they were very low.
Yes.
So what we were trying to do was butter up the vendor to allow us for a low deposit.
Yeah.
So what we did was we played with the conditions to drop it to, I think, a 4% deposit.
Okay. And do you know, that comes into play in terms of settlement as well from that respect. Victoria is one of the only states that actually allow, it's called a Section 27, in which from when the purchaser pays the traditionally 5 or 10% deposit, after 2 to 3 weeks as agents and once conveyancing and banks have approved, we can actually release that deposit to our vendor to enable them to go and purchase another property. So it's really interesting. If we had a client that, had a 30-day settlement and they're only wanting to put forward or can put forward a 5% deposit, it's quite irrelevant in that respect because it's just going to be sitting in our trust account anyway.
Yeah, for notes.
So we're not... The clients aren't really eligible to use that fund. So 5 or 10%, it's just going to be in our account. So there's a lot of different methods and a lot of different ways, like yourself, things that you can negotiate with to really be appealing and preferable to the owners.
Correct. And what we were trying to do was, and this particular person, we figured out it was like an elderly couple that wanted to kind of move. So we knew they needed time on settlement.
Yes.
So it was like, okay, we'll come to you with the long settlement first.
Yes.
Accept that. Come to you with a shorter subject to finance. So we had security because they want security.
That's what they want.
They want security.
Yes.
And so we had to go with those 2 conditions and offers and negotiating and then bring down the deposit.
Yes.
See, if we went deposit first, we would have scared them.
Correct. No, couldn't agree more.
And so just for people to understand, obviously I've done this a few times, and I'm not no guru out of it, but negotiation is so important to meet not just the price, but the transaction in the way that both parties want.
Of course.
And the other thing is remember, I am coming from a logical standpoint.
Yes.
I am not coming from an emotional one, which you got to remember, the clients are talking to me going, I want this.
They're emotional.
Yeah, they're emotional. And I'm kind of like between them going, this is what you're going to say. This is what
Calm down, guys.
Calm down. This is what we need to happen, because I'm looking at the numbers going, you're not going to make this happen. You need a deposit of this.
Yes.
You need this. Go back and talk to them about it.
Yes.
And don't get me wrong, I don't do that for every single client. I'm not a trained negotiator when it comes, but these people really needed me.
Sure.
But you see like, one, why people hate talking to me when it comes to real estate from a real estate agent for a second. But no, but that's why it's so important to have this discussion, because behavior and emotions is involved in property. It always is. And then like if you talk about investors, how many investors rent their properties not at market price because they feel for the tenant?
So many. So many. I had one that a tenant actually just vacated recently, but he was in the property for 8 years.
Yeah.
And he was paying below market rent. And the owners said, you know, they look after the property, they pay every time, we deliver them a Christmas gift, they're great with maintenance, so we would rather look after them, knowing that we've got a great tenant looking after the home.
It's interesting. I had a client had to sell a property recently, and they're like, we feel so bad for the people. And I'm just like I get that. Like, I do get that. We are humans and we get it. But if you are emotionally connected to it, it's having an impact on your finances. Now, you might be okay with that, but you can't have both.
No.
Yeah? You can't have this.
No, you can't.
You can't.
No.
You can't. And I just see so many people. And that's why, like, when we run the numbers on property investing, most people aren't making money. Most people aren't making money because it's the emotional side of the decision making and not the logical side. See, like your client, how you spoke about before, if you want to talk about habits and behaviors and emotions, let's say, for example, that person was paying $300 a week. And Mr. and Mrs. Nice just kept it on $300. Year 2, year 3, year 4. And then interest rates went up, and then they go, we can't afford $300 a week to be, getting from this person. We've got to up that to $500 a week. Now, Mr. Good Guy, who's in the property, has gone, I love you too, but I can't handle this extra $200 a week. I'm out. However, if Mr. and Mrs. Nice, who owns the property, incrementally increased,
gradually,
Mr. Good Guy could have handled that. Why? Because of their kindness, they actually put it in a bad situation. So even as a landlord-tenant scenario, what's your emotions doing to your investment strategy? Very interesting, isn't it?
It is very interesting. It is. And it's a really tricky one, especially in the climate that we're in now. I've been in the industry for 10 years, and it's the last 18 months is the biggest turnover of investors leaving the market as to what I've ever witnessed. So in terms of the investor versus tenant strategy, it's a real eye-opener in terms of the current market and climate, what we're experiencing. And I'm going to say probably 80% of our investors, it's the numbers game. You do have the 20% that have got the emotional connection and are potentially in a different financial situation. It's with property across the board, whether it's sales or rentals, I think it's really knowing, and I go back to this a lot, but it's your why. Why this property? Why now? Why these figures? What am I going to leverage off that? I had a discussion with one of the girls in my office this week. They've got an investment property, and her partner is looking at selling and she's looking at holding on long term. And we had the discussion, why? And she is under the belief that you have an investment property, you have it for the next 10 years, it's potentially going to double in value, and it's a stepping stone. Where my opinion on that is I've just sold my investment property, and it's what works best for the individual. I've leveraged off that to this point to get me to where I need to be now. So it's humans. What works for you may not work for someone else. So it's a really broad subject.
100%. And if I went to a barbecue with you and you said, hey, listen, John's a financial advisor, first thing they'll say to me is, what do you think of property? What do you think of this? What do you think of this? They are literally, they're hoping that I've got medication in my...
crystal ball.
Yeah, or crystal ball, but even the medication to pull out my thing and go, listen, I'm taking this for myself. Here you go. It'll work for you. And so what I say to people is you got to think about it. Even if it's your parents, your brother and sister, whoever who love you, you can't take their medication for your symptoms.
No.
Because if you do, it might work, but it might kill you.
Correct.
So, yeah, investing in property, I have mentioned before and I will mention again, it is an individualized process and it is I'm really glad that you've said what you've said.
Yes.
It is important. I love property.
Yes.
Always have, always will, but it's got its place. Yeah.
Correct.
And for a lot of people, they do it for the wrong reasons because they don't know their why.
Yes.
And they don't know the impact of that huge decision. Because let's be honest, it's a $750,000 decision or $1 million decision.
Correct.
Yeah.
Correct.
Of what that impact is going to be.
Yes.
On their children's education they want to do in 5 years or this or that or their holidays and if you don't have that big picture and that plan done, that could derail your whole financial future if you get that wrong.
Costly exercise.
Really costly exercise.
Yes.
And that's when you see people having to be forced sales,
Correct.
not live the life, miserable.
Yes.
So we can talk about property for a long time, as you can see.
Yes.
But I want to leave maybe a tip or two from yourself about maybe one for sellers and maybe one for buyers that you have. What's one or two tips that you want to share?
From a seller's standpoint, I would say presentation is key. And what I mean by that is what we're seeing at the moment, and it's across the board, it's friends of mine that are agents in different areas and I chat to all the time. They say the similar thing, and it's homes that are freshly painted, new carpets, fresh mulch, that presentation are still turning over for a reasonable good price. We're still getting great numbers through the door. We're getting multiple offers and they're still achieving great results. Homes that are a little bit more tired, original, are the ones feeling the pinch.
Yep.
What we're seeing is a lot of buyers are now more than ever putting most of their savings to secure the property where they don't have the excess 10, 20,000 to do cosmetic work. So I think now more than ever, it's from a seller's perspective, it's really important to speak to an agent in terms of what should I do and what shouldn't I do? You don't want to overcapitalise either. So it's really understanding the market and sometimes spending money to make money.
Yeah, trying to make it as turnkey and easy for the entering family.
Yes.
Okay, cool.
From a buyer's perspective, I think it's really important for yourselves to realise or to know long term. And what I mean by that is from a buyer, if you're looking for a flip, you want to buy and turn it over in 12 months' time, it may not be the market to do that. It's a real unpredictable market. If it's, your home that you're going to be in for the next 5 to 10 years and it's coming to negotiations and you need to stretch that additional couple of thousand to really secure the home, I would encourage you to do that.
Yeah.
Because the market's going to be in that many ups and downs, I guess you could say, within the next 10-year period, that a couple of extra thousand you're paying now is irrelevant, but you've been able to secure the home of your dreams.
Yeah, and look long term.
Correct.
Yeah, look long term. And we're seeing that as well too, that turnover mindset is just increasing the risk of financial ruin.
Correct.
So
Correct.
There's some awesome tips. I've really enjoyed this one. For your first podcast, how good was that? So thanks everyone for listening. Thanks everyone for watching. If you're loving these episodes, subscribe on our YouTube channel or follow us on all major platforms in regards to like Apple and Spotify and so on and so forth. I lost my train of thought, but thanks for listening and thanks for watching.
Thank
Cheers.
you.
So-